I ask a question, there may be 5 or 6 people that had that same question. So, you know, and this conference is supposed to be, it's a workshop, it's a learning session. And you get exposed really to companies or things that you really don't never see anywhere else, okay? So, you know, it's just, it's different, you know. And the people that come to this conference, they're different. They really are. Everyone in this room looks at things different than the average American or the average person. They all evaluate certain things, you know. Most people in this room, you're all super conservative. You know, you have basic beliefs that you were raised on that help build this country. And we continue every day to get away from those for some reason or another, you know. And basically, what's going on in Washington and what's going on, it's basically tearing this country apart, piece by piece by piece. Everything that our parents and everything that you were raised on, they're trying to take it all away from us and telling us that we're not supposed to do it no more, you know, and it's not good. And you have to accept all these other things. You don't have to. I mean, that Trump got elected because he's not a politician, you know, and people don't get it. They just don't get it, you know. They're going to be on his butt till the sun don't shine. Poor guy. So we're going to start. First of all, I'm going to let each speaker give him a couple minutes to introduce himself and tell you what he does a little bit, one way or the other, or other things, and we'll go from there. All yours, Dr. You're first. You're first. You're first.
Well, first of all, I'm a retired portfolio manager from Sears and Roebuck. But I should say former Sears and Roebuck. They know where they're going. And the thought. But in the heyday, you know, they did have a trust, they did have a bank, all that's been sold. And then I went to CNA. I have about half of my master course in the field, but my doctor's is not an academic degree. That's something that I earned from the Institute of Divine Metaphysical Research. So I started the organization called Pleb is the Power Link, and man, it's a metaphysical organization. It deals both on a physical level, spiritual level, and psychological level. So on the physical level, we deal with nutrition, you know, basic things that we need to finish our journey here, you know. You need a constitution or money crisis, that's what you need. You don't have it anymore. As a result of that, since '71, we're in one hell of a situation. I guess we'll talk about that later, but that's all I have to say. So I spent most of my time doing that. But before that, I guess the last year, I've been recovering from lymphoma, cancer in the eye. Cost me about $8,000 in supplements, and then I had to take the target treatment, and I would recover in about 3 months, 10 weeks. So I thank the Father for that, and having mercy on me in the healing process. That's all I have to say. So I am recovering, should I say, a recovering or a cancer patient that really went through a very trying thing. 50% of my bone marrow was lymphoma cancer. So, you know, in your bone marrow, it's both blood cells and what? Your immune system. 50%, and I says, well, I had stopped it with the supplements. I said, I think I'm going to try these treatments, which they told to me that was supposed to be so good. But I went through the treatment. They considered me the best patient they ever had because they couldn't explain how I recovered with no side effects. Thank you very much.
Thank you, Doctor.
I'm Mike Mish Shedlock.
Oh, sorry, I'm just cussing.
Okay. most of you know me. I think I've been coming to these every year since about 2003 or 2004, something like that. So it's a pleasure to be back once again. I've got a website out there which you would like to check out. It's called Mish Talk, and I've got a photography website if any of you are interested in photography. I think I've got some pretty world-class stuff out there on a website called Mish Moments, if you want to look that up. The most important message tonight, though, is I was trying to go after Chris. We're starting in the wrong order, but I want to give a big plug to this guy here on my left. He puts out a newsletter, and he's not paying me to say this. I asked him if I could say this, And if you're not getting his newsletter, you should. I've been subscribing to it a few years now. I've gotten into a number of his plays. I'm up 1,000% on some, 500% on some. I'm down 20% on a couple. I'm down 10% on a couple, and I'm even on a couple. But you add that up, plus 1,000%, plus 500%, plus 100%, and take off 20% or 10% or 15% here or there on the other plays, and guess where you are. So Chris is going to speak after me, and I would tell you, I asked him if it was okay to say that if you went up to him, if he'd give you a free copy of his newsletter, and he said yes. So see Chris and ask for a free copy of his newsletter.
Great.
Thank you.
I don't have to do nothing now, do I?
Watch your mouth. You'll get this. I'm not messing around.
Well,
we almost had altercation here before because of who's next to you.
well, thanks, Mike. I appreciate that. And for those of you that have ever been on my website, you've seen my motto on the top, which says you can get information anywhere, but here you get knowledge. We're inundated with information. You can spend 24 hours a day, 7 days a week on the internet and get one tiny fraction of what's out there that's even half worthwhile. And so my job is to cut through the nonsense that's out there. Because of the internet in part, there's a lot of it. I mean, there is so much stuff. I had somebody come up to me just a few minutes ago with one of these pitches that's out there. The dollar is going to be done September 30th at 4 p.m. and we're all going to be using an IMF currency to buy our coffee and all of this other stuff. The Chinese are going to dump the treasuries. This is going to happen. That's going to happen. I try and just make sense of it all. I call things as I see them. I'm not a perma bear. I'm a perma bull. My job very simply is to make you money. And I've had the blessing and the wisdom and the luck to get into very early. I mentioned Ecuador earlier. There's other companies that I've had people in before anybody else heard of them. And I take a lot of time, a lot of effort, put a lot of pride in being able to do that. And I don't get them all right, like Mike said, but I get most of them right.
Thank you.
My name's Dana Lyons, and first, it's a pleasure to be with all of you. I want to thank Rich and Eric for having me back. I think maybe on the good luck charm, the only time I was here was 2 years ago, and I think within a month, maybe gold bullion and gold miners had bottomed out, so maybe that's why they invited me back. I have a registered investment advisory where we manage private client money using a active risk management strategy. So that's a fancy way of saying, like Chris, we try to have our money in the good markets and pull it out in the bad markets, primarily in stocks, but other markets as well. I have a couple other, sorry for the promotional stuff, I have a couple other subscription services online. One is my 401k Pro. It's geared towards, we provide some of these risk management tools for 401k investors, retirement investors to use, self-directed. And another website called The Lion's Share, which is basically an all-access picture on a daily basis to what we're looking at and what we're doing in our management service. And one plug, it's almost in, I think 6 days it'll be the 30th anniversary of the crash of '87. So we are throwing a sale right now, 22.6% off of our services, the same drop as the Dow experienced 30 years ago. So, and if let me know if you guys are interested. I'll knock another $100 off for anyone here. So that's enough promotional stuff.
Thank you. Okay, we'll start with our first question from the field. Who's got it? Well, don't be bashful. Yes, speak up.
Yes, sir. My question is mainly for Mish.
Okay.
Because Mish has written in the past about, among others, a certain Ken Fisher. And in particular, he wrote a post critiquing Mr. Fisher's position that the U.S. doesn't have too much debt, it's got too little. If that rings a bell, Mish.
Yes, it does.
And my sense of it is that this guy is very highly regarded in the mainstream, and if you want to take a poke as to how someone with such, by my lights anyway, problematic thinking can be so highly touted, and whatever light you can shed as to how you think that a saturation of the debt situation would, among other things, lead to the sort of spikes or explosions in the price of gold, which of course Mr. Fisher disses out of hand and talks about back some aristocrat centuries ago drank gold because she thought it would make her more beautiful or longer living or some such.
All right, I think I've got the question here.
Sure.
First off, you have to realize how these people get into the positions they get into. It's all groupthink. Everyone on the Fed thinks alike. I mean, they might come out and one says, well, I'm in favor of high rate hikes, and the other one says, well, I'm really in favor of rate cuts. When it comes down to the final vote, there's a couple dissents, and I'm wondering if it's on purpose. But they got to be where they are because of the positions that they float. And the same thing happens in academia. You know, the Krugmans and the Larry Summers and all the MMTers are out there. Modern monetary theory says that that this debt doesn't matter, and that is actually what these people believe. I don't think that they're necessarily evil. I just think they're stupid. And in general, that's my philosophy. If stupidity is one of the answers, that's probably it. But they get in positions because the governments like loose money, the banks like loose money, and these guys actually believe that inflation is a good thing. And so now we're at a record high debt, not just in the U.S., but everywhere. So people think that the U.S. dollars implode, and everyone looks at the U.S. People in the U.S. don't look outside the U.S. The problems outside the U.S. are just as severe. China is worse than the U.S. in my opinion, and the Eurozone might implode. So, but right now we have confidence that central banks have everything under control. This goes back actually a few years when Mario Draghi came out and said, we will do whatever it takes to save the euro, and believe me, it'll be enough. He actually didn't do anything. It was that statement. Gold peaked right around that time and declined all the way from there, all the way back down to about $1,000 bucks. What we're seeing now is an increased loss of faith in central banks. I believe we're headed for a currency crisis, and other people believe that too. But anyone who tells you they know when it's going to happen, they're crazy. They don't know. I don't know. But long term, I'm looking right here now at nearly an everything bubble in everything but gold. My money here is on gold.
Thank you. Next question. Yes.
I'm just wondering, what do you think about the idea of like the Fed has, that there should be a 2% increase in inflation each year, and that's a good thing and something to target. What do you think about that?
What's that question?
Well, I'll take that. They don't know what the rate of inflation should be. I don't know. The idea that these central banks, know what the rate of inflation be. If the Fed came out tomorrow and said, we're going to set the price of orange juice at $3 or whatever, everyone would think they're nuts. Yet, fundamentally, it's probably easier to set the price of orange juice than to know the proper rate of interest and to know what the proper growth rate in the economy should be. They are really playing a guessing game. They're always chasing their tail. We had, Greenspan was bearish in 1996, 1997, 1998. Greenspan became extremely bullish in 2000 and was worried about the economy overheating. It's in the Fed minutes. I'm not making this stuff up. And interest rates plunged then. So to save the bankers at that time that overinvested in dot-com companies, they blew another bubble known as the housing bubble. Greenspan didn't see it coming. Bernanke didn't see it coming. In fact, Bernanke flat out said that there is no housing bubble. And now they're saying the same thing. They don't see a bubble. Look at a chart of debt. Look at how much credit is on the balance sheets of banks. And if that credit can't be paid back, there's going to be another crisis. I just can't tell you when.
Thank you. Yes, sir.
when you have as much debt as we have, as much leverage, growth and inflation become mandatory, you know?
Exactly right.
Keep the thing, keep it running.
And that's why where they come up with a 2% number is a different story, but that's why the Fed is pining for at least some inflation, because inflation is what allows you to service debt in ever cheaper dollars and with an ever more elastic currency. You know, and the Fed right now, though, is under some pressure on this. And Mrs. Yellen put her own foot in her mouth when she started mentioning things like wireless services and some other things, because technology, innovation, competition, and a variety of things mean that over time the prices of things in some areas should actually decline. And when did that become a bad thing? It's a bad thing when you have a fractional reserve banking system that is going the other direction, requires more leverage, requires that. And on the subject of inflation really quick, you know, not for the first time, a lot of people, when you went back to 2008, 2009, and all the central banks started their quantitative easing and ZERP and NERP and all the rest of their policies. And you had the usual suspects telling you that gold as a result was going to go to $5,000 an ounce because we're going to get hyperinflation. But we didn't get the hyperinflation where everybody thought we were supposed to get it, so gold peaked when everybody figured out, wait a minute, we believed the wrong narrative. Well, we did get the hyperinflation, like Mike was alluding to. We got the hyperinflation in asset prices, again, because now the notional value of derivatives now exceeds the peak in 2007. Real estate prices, median, are back above their 2005 or 6 peak, whenever that was. And so the big story to come is that, yeah, other things are going to finally start catching up. And I've been believing for a while that if the central banks can keep things together, and there is a lot of liquidity in the system that's giving everybody a tailwind, we're going to have a stagflation-like type of environment for a while. It's going to be a shadow of what we had in the late 70s and early 80s. It's going to help resource prices, but it's going to last only so long. The next major event will not be that the hyperinflation catches up where we all think it should. After the assets have already hyperinflated, the big story to come is going to be another deflation like in 2008.
Absolutely. People, the problem with inflation is they don't see it, but it's there. The inflation is in asset prices. The Fed says there's no inflation. Well, they don't count housing prices as a measure of inflation. Instead, they count owner's equivalent rent. And if you look that up, the BLS actually does a survey, and they ask people how much they would pay if they were to rent their own house for themselves. And that's what gets reported as housing prices, not real housing prices. So there's plenty of inflation out there. They just don't see it. And the irony of this fact is that they're creating an asset bubble that's going to implode, that is absolutely guaranteed to bring about the deflation that they are trying to fight now. Deflation is actually a good thing. The Bank of International Assessment, the BIZ has come out and said that. These central bankers, with their group, think they don't see it that way. So that's why a currency crisis is coming.
Thank you. Next question. In the back, please.
How much longer for the dollar as a world reserve currency?
I actually just wrote about that tonight. If you look at, that's my current post out there right now, in fact. People are talking here about the yuan is going to replace the US dollar, or that the US dollar is going to implode. And they give various reasons, and it's all from a US-centric standpoint. People in the United States don't know a damn thing about Canada. Most people in the United States probably cannot find Spain or New Zealand on a map. That is the sad state of affairs here. So we look at things and we see things from our own perspective. We need to see things outside of our perspective. And if you do, you'll see that China is even worse than the US. The Eurozone, the Italian banking system is insolvent. U.S. banks are actually in far better shape than Italy and Spain. And when they default, when Italy does default finally, it's going to bring down Germany with it. So as for the yuan, look at the U.S. I can say many negative things about our country, but we have free capital markets. there's capital controls in China right now. People want to get their money out of China, and a lot of it is going to places like Vancouver and Toronto, and even the west coast of U.S. buying houses. So China has capital controls. They don't have a floating currency. They don't have any bond market whatsoever to speak of. So this idea that China is just going to suddenly overtake the United States, in my opinion, is absolute craziness. Now, ask me in 20 years, maybe after a currency crisis, my opinion will change. But that's the way I see things right now. And so, just forget about it. There's going to be a crisis. I don't know what's going to replace, the U.S. dollar as money. It might be gold. It might be something else. But it's a big guessing game right now. And anyone who tells you that they know what's going to happen, they don't. They're either charlatans or they're lying. I will tell you right now, I don't know what's going to happen.
Well, I like to say this. The world debt, just look at the world debt. The system is heavily manipulated because you can't put up this type of debt without your interest rate going reverse. In other words, the world has roughly about $270 trillion, and the economy, the world economy is only about 72. So let's round it up to $100 trillion. The world's economy, $100 trillion, and you owe 275 trillion, or just say 300 trillion. But what's the interest rate on $300 trillion? Just think about it. We're talking about $300 trillion. Well, let's take out 100 trillion for the EU having negative rates. It's a little less than that. What I'm trying to get you to see is that when you add, if you're going to choose an interest rate of 3% on $3 trillion or $2 trillion, whatever you say, if you do that, and then compare it to what type of expansion you're going to get on the second $2 trillion, in other words, there's not enough growth to be able to offset your debt. It's like you got a house, and say you got a house, you say $50,000 in debt. That's a lot of pressure for the average person. But if he has $100 in equity in his house, he don't feel too bad. He says, well, I got equity in my house, so that's enough to offset the debt that I owe to my credit cards or whatever. But you don't have that situation. You do have a situation where all the assets are hyped up, but this is the problem. This is the big problem. This is the big problem. With your pensions in Europe, US, and Japan, this is it. I've been a portfolio manager. In other words, the average pension, what they use for returns, what should they be generating for future expenditures, is 7%. I said 7%. We had 0 or 1%. So you're not generating enough income to do what? To pay off future liabilities. So that means most of your pensions are bankrupt, literally.
Absolutely.
Yeah, absolutely. So what that means simply is this. Nobody in here is going to get a full pension. Say you're supposed to get $5,000 a month, you're lucky to get half of it. Because they don't have the money. They're all underfunded. And there's no way to make that up in terms of interest income or the market. Now you can't, bless their heart, they're going to let the market fall with all these 401ks in there. So they got to pump these markets, because I tell you this, if the markets fall, these 401ks, they can't make these pensions, I think the pitchforks will come out.
There will. Illinois pension plans are 30% funded, something like that. And I just read a report, I was kind of surprised by this, but actually Kentucky's in worse shape. It actually shocked me. So there is going to be a pension crisis, and it's actually conceivable that pensions is what triggers this next downturn.
Yeah, it means it undermines the people's confidence. As you look at the stock market, all the confidence is up, but they realize, wait a minute, I don't get a pension. I'm only getting half my pension. My old man was a teamster. He's about $4,000 or $5,000 before he passed. So my dad said, nobody's going to get that type of pension no more. I don't care who they are. So whatever they were promised, they're lucky to get half. I said, money's not there. And it's hard to understand the impact of what that means in terms of the economy, to the war-born babies. You'll get Social Security. My question is, what will it buy?
Next question. You have a hand up? No?
Yes, I do.
Yes, here.
I was just wondering, in what scenario could you see interest rates rising and the Fed being powerless to stop it?
I don't. They will suppress it.
That's right.
and eventually that has to cause a crisis. I just don't know when. The economy can't take globally, in Japan, in here, in the U.S., interest on the national debt is prohibitive here. If you look at the amount of interest that the U.S. pays, we're only able to pay that interest because interest rates are so low.
Okay, on $20 trillion, 6%. 20 trillion. It's $1.2 trillion. You see, that's not much. But do you know how much we collect in income tax revenue? About 2.4, 2.5, possibly 3 at the most. So half of the income tax revenue goes for the interest payment. They get paid. Only thing it's probably going to see is defense and Social Security. So wait a minute.
Yeah, 100% of it would go if interest rates, rose to like 4%.
Yeah.
Every penny would actually go to paying interest on the debt.
If I could add, my fellow panelists might disagree, but I think interest rates have bottomed. At least long rates. I don't think the Fed and central banks can control them forever. We're more technically oriented, so we're not. The Fed can fight it all at once, but if you go back hundreds and hundreds of years, you have repeating cycles. And in the interest rate cycle, you go back hundreds of years. There is a repeating 60-year cycle. You go back just in the last cycle, interest rates bottomed in the early 50s, topped in the early 80s, about 18% on the 10-year. I think, in our opinion, the bottom in the long-term rates was way overdue. Should have bottomed out probably in the early part of the decade. I think a lot of the intervention has delayed that. I think there's a good chance that the June-July bottom in rates in 2016 was the bottom in interest rates in my lifetime. So in our view, my colleagues might disagree. I think interest rates are going up for years, if not decades.
When they start to rise, and finally start to rise, I would agree with that. Let me put it this way. I'm not sure that we've hit the bottom yet. It's possible that we have. I actually rather doubt it. As soon as the economy collapses, if the stock market starts to decline, the Fed is going to reduce interest rates. We're going to see yields rise. I'll tell you this, I believe junk bond yields have probably hit a bottom. It's absolutely crazy. The junk bonds in Europe trade at an interest rate lower than U.S. Treasuries. Now that is freaking crazy. That is absolutely crazy. So yeah, I'll say that corporate bond yields might have bottomed. I think the long-term Treasury yield might put in another low.
All right, Chris.
Mike mentioned earlier that the Fed constituencies, the different bank presidents and so forth, have this groupthink. Part of their groupthink is that to some extent they really believe in their own system. And because of that, they are willing to risk right now a move toward the so-called normalization, where they are willing to let the market have a little bit better of a hand. One of the things that, among many, that annoys me, and I'll say this, folks, if you listen to any guru who more often than not is talking about manipulation as the reason why precious metals don't do what they're supposed to do, do not walk away from that person, run, because they have utterly no idea what they're talking about, right? Because gold and silver are products of market behavior, just like everything else is. If these guys want to get worked up over something to do with manipulation, talk about what's gone on with interest rates for the last 10 years, okay? And where it's still in Japan, and to some extent in Europe still going on. The Fed right now is less bad than the rest. But the Fed does want now to try and experiment with the opposite of the experiment that they've been conducting for nearly a decade. And that is, see how long they can get away with letting the market get back to some kind of market pricing. So I throw in with Dana on this, that very slowly you're going to see the long end rise. The Fed hopes that it's for reasons that you've got inflation of a good kind coming back, global growth is still doing halfway decent, and the reason why interest rates are going up at long last is because people who had their money parked in treasuries at 3% or less, what's the 30-year, 283 or 4 today? Something like that. Well, somewhere's in that ballpark, you know, and a 10-year was a little under 2.3 again this morning. They want to see those rates meld up a little bit, but because people are taking their money back out of treasuries and putting it into the stock market, they're betting on the infrastructure moves, the cyclical stocks, the copper, the energy, and the rest of that. That's what the Fed wants to see. So I think that is, as Dana says, what we're going to have for the near term and perhaps for some time to come, barring something out of left field that scares the hell out of everybody and pushes rates right back down. Inevitably, we will get to where Mish is talking about, where because of simple mathematics, we may see rates come right back down later because believe you me, and if you want those $5,000 an ounce gold predictions to come true, it's not going to happen in this stagflation light environment. It's not going to happen right now with the stock market going up. It's going to happen when the next shock hits and all the next QE programs have got a 0 or 2 added on to the end of them. That's when you'll see that.
Yeah, when everyone's now is believing that, you know, that the Fed is going to keep hiking, that the ECB is going to tighten, and China is going to allow more reform. Well, when we see those things all turn around to the opposite, you know, I think that's going to be the catalyst for the gold rise. I can't tell you when that's going to happen, but I can tell you I believe that is going to happen.
Well, I like to say this. Everybody, especially seniors, you know, that have any cash, $10, $15, $20, $30,000, $100,000, $300,000, you're not getting the interest income. Now, if we go back to 2000, on $100,000, you can get $7 grand. It's about 6 or 7%. You are not getting it. Everybody's chasing. It's a huge amount of income. People are in what? Exxon stocks that have some type of what? Dividend. You get 2.5%. It's not enough.
This has destroyed people on fixed income. Absolutely, the Fed's policy has killed them. They're trying, I believe they're trying to correct that now. They will never come out and say we made a mistake. Never, even though that they have. I wonder if privately they see these asset bubbles, but publicly they deny them. But once again, I return to something called Occam's razor, which says, if stupidity is one of the answers, that's probably likely it.
Rich hits the wall.
Rich, yeah. One more thing on it as far as inflation. You need to remember that, you know, once upon a time, and this is the dynamics of how fractional reserve systems work when they get so stretched as this one is. Remember what Paul Volcker used to do? How did Paul Volcker raise interest rates? We woke up in the morning, there's a press release from Paul Volcker. By the way, while you slept, I raised the federal funds rate 0.75%. If you don't like it, too bad, go to hell, have a nice day. And now we get utterly tortured with all of this double talk and double speak. I had my cartoonist do a picture of Janet Yellen looking like, you know, a two-faced character from Batman, you know, because that's what we get from them. But they do know, and they will once in a while let the truth kind of slip out.
If they want.
And if you notice, what did Powell say yesterday morning? What has Bill Dudley, who is the most important person at the Fed, really, because he runs the checkbook, what has he been saying about asset bubbles? The Fed, when you go back 3 or 4 years, and a lot of people were wondering, what's taking them so long? Why aren't they starting to normalize? Why aren't they raising interest rates? They were still afraid of the markets. Now the Fed has started raising interest rates when arguably the so-called data was less in their favor than it was a few years ago, and some people said they should have been raising interest rates. Why? Because more than you know, and more than they'll admit most of the time, the Fed does know that they've created asset bubbles again. They have talked about the fact that even after 4 rate hikes, liquidity conditions in the markets are easier than before they even started raising interest rates again. So when it's convenient for them, they'll point to the wage numbers from a week ago today. They'll point to the latest PPI and CPI numbers and say, look, we told you inflation's finally catching up. If the numbers aren't in their favor, you're going to hear more yes, but. because this you can take to the bank. They will continue their so-called normalization until the market stops them. And it's not going to make a bit of difference what the unemployment rate is, what the headline inflation rate is, nothing. Because they know that they've blown these bubbles too big. And as bit by bit, until the markets cry uncle, they're going to try and take it back.
I don't know if they know, but what they will do is make an excuse, whatever, to do whatever it is they want to do. They are going to find an excuse to do it. Doesn't matter why. Right now, they keep trying to talk the market up. When we get into a situation where the market agrees with them, they'll hike. If the market disagrees with them, they won't. So it's not really the market driving them. You've got this weird situation where everyone is gleaning on nuances. One word change from the last FOMC statement to this one. If the market picks up on that and for whatever reason believes it, then interest rates go up. Otherwise, they don't. So it's kind of weird. But gold bottomed, in my opinion, around 1,000 when it hit there, and something snapped. I don't know what it is, but we're seeing increasing disbelief from the market that the Fed has things under control. I am very bullish on gold right now. I'm not always bullish on gold. Chris is better at this than I am, but right now I'm as positive as I've ever been at one of these conferences. And looking in this room, this is quite amusing actually. This is probably the smallest set of people I've seen in one of these rooms ever. When gold hit, $1,900, we had 2 rooms this size, all filled up, and people were standing in the background. Right now, we have, I don't know, give me a count here, Rich. 80. This is the 80. Smallest. Is this one of the smallest groups here?
Yeah.
This is a reflection on sentiment, folks, that sentiment in gold is washed out despite the massive rally that we have seen in some of the miners and despite the rally in gold. This is a buy signal. You want another one? Goldman Sachs came out yesterday, I think, and predicting that gold was going to go back down to 1,000. Goldman Sachs is one of the biggest contrarian indicators you can find.
Thank you.
Well, I like to say this very simply. I pity the person that does not have gold and silver, especially within the next 6 months. And this is the reason why. If you've been following the news carefully, and look at that little Kim, the Rocket Man. That's not my words, that's the President Trump said, the Rocket Man. Listen, I've been in the streets, I grew up in a tough neighborhood, and he's not going back down. I can look at people's eyes and tell them, this guy's not going back down. He's the guy that said, listen, the guy in the street, I'll blow your brains out and I'll go to prison for the rest of my life. You can't talk to him. Psychopath. Well, this is what you're dealing with. If we start throwing nukes backwards and forwards, what do you think is going to happen to these world markets? And I guarantee you can see $3 to $4 move in gold, and at least $5 to $6 in silver in a flash, because folks with these markets will go into panic. We never had a war of this type before. Desert Storm 1 and 2. All right, those just conventional ones. We're talking about nukes, folks. We're talking about one bomb wiping out 1 million folks. We've never went to this point. This is worse than the Cuban crisis. But my point is this: the way this thing is heading, and there's no backing down, you'll be in serious consequences if something like that does happen. And you're out of gold, you won't catch it. You will not catch it, you will not catch silver. Because what you're going to see in the commodities market, up to the limit, market locks, up again. They shut down for an hour, up again, up again, up again. And you'll be mind blown on that one incident. That's what you got. We're in a world that you just don't know what black swan is going to jump out on these markets and blow them up. And I think the Feds will have to run like hell to try to bring everything back under control. And they're beyond them at that point. That's why it's very important to get your portfolio together and do the shuffling.
Way in the back.
Rich, a small question for the panel. Obviously, the panel is saying you should have a small stash of gold right now, a small stash of silver. Should you also have a small stash of weed just to smooth out the curves?
Small stash of what? I didn't hear the term. Weed. Oh, weed. Yes, a small stash of weed. Yes, absolutely. And I I encourage everyone to go talk to that gentleman there.
Yeah, make sure you got some later too.
Yeah.
I have long said that when I was doing a circuit back in the late 90s, these Y2K expos, and I was bullish on gold until the end of '99. I was bullish, wildly bullish on the U.S. stock market when some people were out there saying cash in your IRAs and pay the tax and pay the penalty and put your money into precious metals because it'll all blow up on January 1st, 2000. And I said we're going to have a rip-roaring bull market in '98, '99 because even though Alan Greenspan was the single most destructive policymaker in the history of mankind, he did do one thing right when he was Fed chairman, and that was he made very sure, starting way back in the mid-90s, that the Y2K issue was not going to be an issue in the U.S. markets and the U.S. banking system. And the whole world knew it, and that's why you had such a powerful melt-up in financial assets in this country in '98, '99, because the whole damn world was parking their money here, because they knew that the maestro did do that one thing right. But I digress a little bit. I say that because at some of these Y2K expos that I went at, and other things of its nature over the years, you always have the people that are selling gold that'll tell you, you got to have your money in gold, you got to have your money in silver. Worse yet, some of these shysters told you to buy rare coins because the government can't confiscate them. Another big lie in many respects. But I always would say this: you stock up on those $20 St. Gaudens gold pieces, and I'll buy tobacco and whiskey, and I'll stock up on that. And if everything goes to hell, we'll see who can barter the easiest, and I guarantee you it's going to be me. And especially if I had some weed with the tobacco and whiskey.
Amen, brother, amen.
So the point is well taken. Wherever you're at, wherever you live, whatever your station in life, whatever your income, and I can tell you this from living through 2 hellacious hurricanes back to back in 2 successive years, where we didn't have power for several days and food that was going to spoil if we didn't have a backup plan. You should always be in a position to answer the question: if tomorrow morning I woke up and the world as I knew it when I went to bed was not there, the ATM machines didn't work, I couldn't buy gasoline, I couldn't go to the grocery store, the power company didn't work, all of that stuff. How long are you going to be able to take care of yourself, feed yourself, defend yourself, clothe yourself, live in some type of existence, let alone comfort? And address that. That's a very good point. And it's not just gold and silver coins. You got to ask yourself what you can barter with.
I want to make a comment about Greenspan, actually. He's actually been right about a number of times, and he's been right in major ways on many things. But the irony of this is, whenever he's right, no one believes him. Greenspan was a huge free trade advocate. I am a huge free trade advocate. No one believes Greenspan about free trade. Whenever Greenspan says anything that makes sense, no one believes it. So if you want to know whether Greenspan's right or not, just look at what he says and how widely believed it is. If it's widely believed, it's wrong. If no one believes it, it's probably right.
Next question. In the back, straight back.
Yeah, I just wonder, what is your opinion on QE quantitative easing? Is it going to return in the U.S.? Has it actually ever stopped? And what about Japan and the European Union? And what is the impact of this QE? What impact will it have on our economies? We haven't seen the impact yet.
Yeah, I'll tackle that. I think QE is all, the benefits of QE, as the panelists have mentioned, has all accrued to people managing money in financial markets. It's inflated asset prices. It hasn't gone to, Main Street at all. So I think as far as QE, and getting back to the inflation targeting question, I don't think they're targeting inflation. I think they're targeting the S&P 500. I think that's the indicator to watch. You see the asset prices, i.e. the S&P 500, you see it drop 3%. All of a sudden you see all these central bankers, Fed presidents come out and start jawboning the market back up. That's the indicator to watch, and that's the indicator. If you want QE to come back, watch the stock market. the inflation, the other exogenous economic indicators, it doesn't matter. Asset prices matter 100% to what to this keeping this market, keeping the charade propped up right now. So
Because of the debt on those assets, they need to make that debt serviceable.
And also, I'd like to say the largest stockholders of Apple are the fan stocks. Do you know what they are? They're the sovereign funds. In other words, the Swift sovereign funds, I don't know how. They were one of the largest holders of Apple.
Swiss National Bank.
That's what I'm saying. Swiss National Bank.
Yeah, the central banks are buying Apple stock. I don't know if you knew that.
Right, that's what I'm saying. In other words, they create money out of nothing. It's like you write a bunch of IOUs going down buying stock. This is what the power they have. So they're buying stock, and able to drive these stocks to crazy heights. Just take, for instance, Tesla. Do you know this past quarter reported they only made 250 cars? 250. Say it again, 250. And you look at that stock, was it up with 280 or 270? I forget what it was. I mean, it's crazy. They're supposed to make thousands. They only made 250 cars, and Tesla, I'm gonna tell you, that's the case for bankruptcy. It literally will go bankrupt. You can bet as the sun will rise tomorrow morning, the moon don't set. It's gonna go bankrupt. There's no way possible that they can exist.
Chris?
See, before we had the emergence of the US dollar as a complete fiat currency and then fractional reserve banking really took off, the world used to be that we all went out, we worked, we innovated, we created, we bought things, we sold things, and what we did in building an organic economy was reflected in the financial markets, in interest rate levels, in the prices of stocks of different companies and sectors and so forth. Now that has been turned upside down. And the only way we get most economic activity on Main Street is by first trickle-down monetary policy, where they create enough new credit that trickles down and hopefully gets some traction. This is why, and on my website, when you go there, I've got a discussion near the top of the front page on infrastructure. This is why it is a far bigger deal than you possibly realize, most likely, that the Trump administration gets together with Congress for an infrastructure program, because they're running out of tricks, all right? In the 80s and 90s, you had a big bull market in financial assets that was really a form of hyperinflation, but it created enough of a wealth effect that it kept the overall economy moving along. But now, as we all know and have heard in many contexts, there's less and less traction on the Main Street economy from all this money printing and quantitative easing. They're trying to extricate themselves a little bit. And what has the Fed numerous times admitted? One of the reasons that they want to try and, quote, normalize now is so they've got their guns reloaded a little bit for the next time they have to come out with quantitative easing. Because that's the world we're in. That's the system they've given us. Now, years ago, you started hearing talk about what were called carbon credits. And there was a reason for that. And it wasn't because tree huggers and environmentalists thought, thank you, sir, you're a gentleman and a scholar.
And a referee.
And a referee. And it wasn't because only that you had environmentalists and other do-gooders that correctly look at what's going on in the world and say, gosh, we're really hurting the earth, we need to do this. Carbon credits are tradable. They wanted to set up exchanges. They want to securitize this. Okay? They need to find some other area that affects the economy that is big, that they can build up and securitize for the next move forward to create a lot more debt and not have it fall in on everybody right away. And watch the evolution of this when it comes to infrastructure. Because what they will do in the end is not only, this won't just be a giveaway from the government, okay? It will be a public-private partnership. You'll have banks set up, they'll securitize it, slice it, dice it, and cut it in a million pieces like they did with mortgage assets when that bubble was growing and keeping the whole economy aloft. And better still, to Dana's point, the legitimate criticism of the Fed and quantitative easing only benefited Wall Street. Next time they have to do it, they'll say, we're gonna print a lot more money, but only to the extent that it goes into bridges and roads and whatnot, because we don't wanna just reward Wall Street. We wanna make sure that Main Street gets rebuilt, and schools get rebuilt, and the power grid gets rebuilt, and aren't we wonderful? That's where this is going.
Will this be like state-owned enterprises in China, Chris?
To some extent it will.
I got a question for the panel. What do you think of President Trump so far?
Wow. A mixed bag. I'll take that. I'm very critical of his, I'm a big free trade advocate. I'm very critical of his policies here on free trade. I think the NAFTA deal was good. I think people don't even understand the NAFTA deal. People who look at it was to say we've lost all of these jobs to China or to Korea or to Vietnam or wherever. We lost them at the point that Nixon closed the gold window. That deconvertibility is what allowed debts across the world to spiral out of control. That's what drove businesses out of the United States to China, to Korea, to everywhere. So people look at these things and they look at protectionism as the answer, when the answer to preventing all of this movement away from the U.S. was convertibility of gold, and it dates back to Nixon. I've got a number of charts on that on my blog, so if you're interested in more, just ask me more. I'll just cut it off here and let these other guys talk.
Well, I like to say this. When you talk about gold, as far as trade is concerned, the strongest currency, well, let me say it this way so you can go back. Let us go back to about 1500, when Cortez came to America, killed off the Indians, and took all, it was a huge amount of silver. We talking about billions of ounces. What that did to the SWIFT, that currency, I can't think of it right now, the SWIFT currency, their currency became so strong that they became, they couldn't manufacture anything and compete in the world market. Now you know it was a little third island company over there that participated in piracy. They were called who? England. England was third world. So they had to use England as a cheap manufacturer because Spain's currency was so strong. Well, it brings me back to this. China, with all the gold that they have and everything, in terms of, really what currency is, it's a swing backwards and forwards. The strongest currency becomes so strong, it can't compete internationally. The weakest currency begins to become industrialized. They can compete, they rise and one falls. You don't like Mitch said, once they took it off the gold standard, it was a free fall. See, gold was the actual impartial what? I guess you can call court martial or judge that said, well, if your currency, you got a lot of gold, good. But you know what? Your currency is too strong. You can't manufacture things compared to the guy that don't have any gold.
When we were on a gold standard, countries could inflate, but only for a while.
That's it.
Eventually, there was a correction period here. But now that we're off the gold standard, countries can inflate at will. This was not to the benefit of the middle class. This explains, in fact, the demise of the middle class. Yet the weird thing is out there, all the Krugmans, all academia, all the members of the Fed, all the banking cartel, everyone in control preaches that inflation is a benefit. It has actually destroyed the middle class.
And the morals of the country.
Dan?
We're still waiting to weigh in on Trump over.
I thought so.
I'll wait,
So we got off that. We got off that a little bit.
Yeah, all right, I'll get back on Trump. My take on Trump is, to quote the late Dennis Green, he is who we thought he was. And I think we had this discussion at the table before the panel. I think the wild card when it comes to Trump is he's going to do what he thinks is right, and he doesn't care what public opinion thinks. He doesn't care what the legacy will be. He doesn't care what the status quo is, which I appreciate. I appreciate that about him. I don't trust his judgment necessarily when it comes to, waking up, grabbing his phone and shooting off a couple tweets off the cuff or whatever. But I think the wild card when it comes to Trump is, if you think back over the last couple decades with Greenspan and Yellen, Bernanke, Bush, Obama. These guys are lifer politicians who all they want to do is maintain the status quo, not interrupt the apple cart. So what they've done is maintain QE, maintain extraordinarily low rates, anything at all costs to avoid something bad happening on their watch. I don't think Trump cares about that. I think he's going to do, I don't think he wants anything bad happening. I think he's going to do what he thinks is right, and something like let interest rates rise, or whatever the case might be. I think he thinks it's going to be right, and I might agree with what he allows to happen. It might cause a ton of short-term pain and chaos, which God knows this country needs to go through a huge corrective process based on the quantitative easing, et cetera, that we've been through over the last decade. I think the wild card is he's going to do what he thinks is right, and that probably, as much as any time over the last decade, is not going to be the status quo. So that might be one wild card that might be the catalyst to tip this low volatility rise in asset prices over the edge.
Well stated, I believe.
My biggest fear about Donald Trump is that in the end, he is going to kill and bury populism without populism ever having been put into effect. One of the things I said about the motto on my website, here you don't just get information, you get knowledge. Who knows what mercantilism is? Few of you do. That is what the Trump administration is pushing. They are not pushing populism. Whether they tell you that or the media tells you that, they are not pushing that. What they want to do, very simply, is go from international corporatism to national corporatism. It's that simple. When you see the fact that this president, who I don't think to this day has apologized to Ted Cruz's wife, going after her for being part of that terrible Goldman Sachs, and then, big surprise, he loads up his administration with people from Goldman Sachs, again, just like all the rest of them do. That makes you wonder. So my attitude about Donald Trump is I think he has some good instincts. I much prefer candidate Trump in some respects to President Trump. I think that he is part Archie Bunker and part your crazy uncle at holiday dinner who you just wish he'd shut up and eat his turkey. He's never been politically housebroken, which is one of the endearing things about him, and that's why millions of people voted for him, because they want the system shook up. You know, millions of people look at the Democrat, Republican parties, like George Wallace said, not a dime's worth of difference between them. And they said, you tell us not to vote for this guy, screw you, we're gonna vote for him anyway because you told us not to. That's why he's president. So in the end, I'm like Paul Craig Roberts. Some of you know who Dr. Roberts is. He was a Treasury official under Reagan. I'm a scorekeeper. When I see President Trump do things that I like, I'm gonna praise him for it. When I see President Trump, who railed against both Democrats and Republicans for getting us into these rat's nests every place on the planet where everything they touched they screwed up, and now President Trump, unlike candidate Trump, wants still higher record spending for the military-industrial complex, and he's belligerent to these countries when even Steve Bannon, who was a terrible loss when he left, was trying to tell him, shut your mouth about North Korea, there's no way to win this, don't stir that up. And let's face it, folks, yeah, little Kim Jong-un over there might not be your favorite choice for if you had to choose your own next door neighbor. We killed a third of the people in that country.
We did.
We dropped more bombs on that country than we did the entire Pacific Theater in World War II.
Absolutely.
They are taught from the birth to hate this country just like a lot of the Muslims do, with cause. So I wish we'd go back to candidate Trump and worry about America first, make America great again, not let's find a different way to conquer the world and make Dick Cheney happy again.
One of the things I hate about partisan politics now is people associate themselves either as Democrats or as Republicans, typically one of those two. I'm a libertarian. I look at issues, and I encourage people to look at issues. So, but you turn on Fox News and they're not going to say anything good about Obama. I can find some things about Obama that he did that I like. I can find a lot of things about the Republicans that I dislike. I look at things and I encourage people to look at issues, not parties. And if more people did that, I think we would see a much better government than what we have right now.
Thank you. Thank you. Next question. Come back again.
Is he a one or two-term president? And if he's going to be a two-term president, what needs to happen in your opinion?
He needs to continue to move in the direction of the deep state, be an interventionist globally, do what they want as far as taxes and infrastructure and a banking system. We'll get thrown a bone or two, just like Reagan. And let's go back to that. I voted for Ronald Reagan twice. First 2 times I was able to legally vote for president. I thought we were going to get a conservative agenda. And name me one accomplishment. If you're truly conservative and truly in favor of limited government, tell me one good thing that came out of the Reagan administration. He was used as cover to explode the size of government, explode the size and strength of the police state, explode the national debt.
Drug problems.
All right? And that's what you got to watch. Like Mike just said, look at issues. All right? Trump says a lot of great stuff. He did as a candidate, and he's doing some of it as president. But in the end, watch what really happens on the ground.
Whether it comes down to a second term is going to depend on one thing. What the state of the economy is at the time of 3 years from now when we run. If the economy is in recession, he's going to get blown out. If the economy is doing well, he's going to stay in. That's really what it's all about. When Obama ran the first time, I did a post on my blog. I made a prediction. This was before Obama even won the nomination, and people thought Hillary was going to get it. I predicted 49 out of 50 states correctly, and I had people telling me I was crazy. This was before Obama even won. But I could see the economy was heading into a recession. I could see a huge wipeout coming. If the economy's doing well, it doesn't matter what happens between now and the next election. It can go to hell. But if it recovers, and the economy's doing well when Trump's in there, and he decides to run, he'll get elected. If we're in recession at that time, he's going to get blown out in a wipeout. This is what happened with Obama, and I think this is what's going to happen again the next time.
Next question.
Why are there so few millennials here?
You haven't got any.
Because they don't know how to get here.
I think they're the cryptocurrency conference, right?
No, they're not
Down the
those.
Right.
Actually, in a way, it's their attitudes are much different than our attitudes. They're not into assets. They're not into homes. They have mountains of student debt. They are living paycheck to paycheck. Record numbers of them are living with their parents.
Absolutely.
They saw their parents fight during the Great Recession. They saw their parents arguing over money, unable to pay for their houses, losing their houses. That attitude is going to stick with them for the rest of their lives. And people don't understand how deflationary that is, how deflationary the student debt is. They can't afford houses, they can't afford to get married, they can't afford to have kids. We've got a huge demographic crisis here, yet these millennials are the ones that are going to have to pay all the pensions, right? They are the ones on the hook to pay for all the public pensions that are out there that are 20% funded or 30% funded. They are going to revolt against the system. I'm not sure at what point that happens, but these were the people that were for Bernie Sanders. Had Bernie Sanders been the candidate, Bernie Sanders, I believe, would have won.
I like to say this, remember that if you look at the curriculum in which they teach in major universities.
Oh my God.
Oh my God. It's beyond, I mean, I grew up in the 50s, war-born, baby. Socialism was in common is he better dead than red. Did you remember that saying? And that's commonly taught, you know. And some of these concepts, people say, well, we need to get free education, we need to get free medical. And I asked somebody, I said, do you know how much that'll cost? There are countries that do have free medicine, like Denmark. If you want to pay 60% of your gross, that's fine.
Their car had a flat tire, they couldn't fix it. That's why they're not here.
Well,
That's a true, that commercial's very true. I mean, it's absolutely pathetic. It's pathetic. You know, they can't fix a flat tire. You know, they also don't know north and south, east or west.
No, I actually I did a blog on this.
Yeah.
This is really amazing. They don't know that it takes sunlight to grow plants. I'm serious. This was in the New York Times just the other day, and I commented on my blog.
They're still checking their E's and Outs.
Yes, sir.
What is the level of durable gold, silver in your, has that bar been raised in the pretty picture you're painting? Is your personal bars going up? Are you bringing more of durable goods into your portfolios, or like what would you be, 20? Some people say 5 to 10% of gold, some people say 10 to 20%. Is that bar going up?
As much as you can sleep with, and no more. If you're worried that the price of gold is going to fall $100, and that's going to cause you to lose sleep, then don't be in it. You know, be in cash. Be in something. Actually, I would say get the hell out of the stock market. But I would have said that 2 years ago, and I've been wrong for the last 2 years. So, you know, you got to admit your own mistakes, because if you don't, someone's going to admit them for you, and probably louder. So, but you don't want to throw too much on any one play, that it's going to cause you loss of sleep.
Well, I've got a mix. I'm just saying, is that bar of durable compared to stuff in the markets?
Each person needs to see, you're asking something that each person needs to determine for themselves. This is a personal issue here. And Chris, if you look at his newsletter, I mean, he comes out and says, you know, put 1% on display. And I look at it and say, let's throw 5% at it. You know, you just need to be comfortable with what you're doing and live with the consequences.
You need to understand that there are radically different reasons why you would buy physical gold as opposed to buying mining stocks, right? Speaking in general terms. Physical gold, physical silver, tobacco, whiskey, weed, food, whatever, that's your mad money. That's what you barter with if everything goes to hell, and there is no stock exchange where you can trade, buy, sell mining stocks or anything else for that matter. And I have always advocated that, first of all, the lowest denominator of anything is the smartest. That's why I could never understand anybody listening to these guys that sell rare coins and survival investments. One of the most asinine things I've ever heard in my life. Who the hell knows what an MS-65 St. Gaudens $20 gold piece of a certain year is worth, that the guy who sold it to you, I guarantee you, marked it up by 50 or 75 or 80% to begin with, telling you that, oh, the government can't confiscate this one, all right? You want to have someone's lowest common denominator. If you're out there, you're a survival thing, you want to buy some food, who's going to give you what you paid for that MS-65 $20 St. Gaudens? You wanted just a 1 ounce silver round. You want 1/10 or 1/4 ounce pieces of gold, but better yet, you want tobacco and whiskey. I've got an old friend where I'm from, originally in upstate New York. He had 2 barns full of nails, toilet paper, wood, screws.
That's a bit extreme, but
everything you can possibly think of, small denominations of everything, all kind of basic stuff that you need to repair a house, to feed yourself, to do whatever, food, everything. He had very little gold and silver. I mean, I don't know what he ever did with all the stuff he had, but you know, remember that in a good environment where you've got modestly rising inflation, asset prices are melding up across the board, you're way better off in mining stocks than you are in actually owning the metals themselves, all right? Because you're going to get the leverage from the mining stocks. So here again, if you have someone tell you need to buy mining stocks, everything's going to go to hell, well, if everything goes to hell, so are the mining stocks.
Right.
Okay, at least for a while. So my overall allocation to precious metals in my model portfolio is a bit less than half of what it was at its peak in 2011, when everybody was getting excited as gold was going up toward 1900, I told people at the beginning of 2011 to sell half of everything. We were at a 35% weighting for an overall portfolio of precious metals. That's the highest I've ever been. And I cut it in half at the beginning of 2011. That summer I cut it in half again, because the other problem that gold bugs have is they get way too religious about gold, and they get stupid about it. Mm-hmm. And they keep all their money in, and they ride it up, but then they go all the way back down. And so a lot of people, when gold bottomed at $1,000, and they were into mining stocks and even risky ones, they're down 80 and 90%.
No, they're bankrupt.
You know, or they're bankrupt. And so now when you've had a nice move to some extent the last year or two, now instead of being down 90%, they're down 60, maybe, or 70. That's not how you do things. So I don't care what it is, whether it's precious metals, biotech, real estate, whatever. You never get overextended in any asset class. You never get religious about it. And if you've got big gains, unless there's some huge reasons with an individual company why they're going to get better, you take at least some money off the table. Because at the end of the day, if you're managing your money, any moron can make money when things are going up. What makes you a successful investor in the long run is when the markets crash and you don't.
Thank you.
That's what you have to
We got to
do.
get out of this room at 8:30, people, so panel will be up here. Thanks, panel. Everybody give them a good hand.
Well, first, I want to get a final comment in here.
I thought we were just getting started. I was waiting for another beer.
Thanks once again to Rich and Eric Verdez. Thanks to all the presenters here that came here. And thanks for the few of you who did show up here this year. I think you saw a good presentation here, and I'm going to make a statement I seldom make. I think the bottom's in gold, so good luck to everyone here.
Thank you very much for the great job.